The dragonfly doji has to go on your foot. Hello, welcome to Forex.Today. Yeah, I saw a photo somewhere. Someone had a giant tattoo of a dragonfly on their foot, and a real dragonfly landed on their foot. So, anyways, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne. I am the Chief FX Market Strategist for TradersWay, sponsor of this event. And I'm here not just to earn your loyalty and respect and convince you to open up a trading account with TradersWay, but help you become a success, teaching you technical and fundamental analysis of trader psychology, macroeconomics, all these lovely things that are required to be a successful trader. And if in some way I help you become a success, you will trade with us for years and 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 years. And that's a sound business model. We love you. We want you to succeed, and we want to be your long-term business partner. Will you let us be your prime broker for your successful Forex trading business, please? Okay, let's get going. Share your screen. Share my screen. Share your screen. Oh, wait, I'll share my screen. Connecting. Okay, so did you survive the Trump State of the Union address last night? If you were a Republican, you're like, yeah, it was pretty good. If you're Democrat, you're like, that was the worst, most horrible, most disgraceful, I'm gonna lean on my hand and go, speech. So wherever you sit, you should be indifferent because you're a currency trader, not a politician. So I just decided to make money. I didn't know what else to do. So anyways, just to go over those trades. There were lots of things, but I just like to throw down the ones that we talk about in advance. Do you like this strategy, by the way? Yeah, I'm probably more libertarian, Ross, if anything. But anyways, like that, this is the strategy. Like we talk about trades every so often. I throw down the trade we talk about, and then the next day I'm like, look, here's all the money I made, and everybody's happy, right? I have a feeling it doesn't make you happy though, but you can see this one is not a perfect trade. I guess I have to draw with this. Here's my drawing tool. All right. You can see I sold, right? 2 mini lots. Whoa, dude. I can't laugh and write with my highlighter. Anyways, so I'm short here. Sorry. Here, right on 50%, bro. Can you guys see? It says you can see. It's telling me you can see. Did you see me draw my red line? All right, we're good. So it came up, hit a 50%, and dropped like a ton of bricks. What do you think? Is that all right? Now, actually, what actually happened is, was it the 5 minute? I think I sold. Well, I sold one of these crosses. I thought I was going to remember which exact cross. It must have been this one, but I'm not entirely sure why. So I don't know. I can't remember this one. But you get the general idea, right? Since I spent a whole half an hour or whatever it was setting this whole thing up, down, 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 up, sell. Well, it went down, 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 up, and I sold. And yay, it's making money. Cool though, right? So can I get a high five for that? How about boom? Yeah. I'm hot like fire. When you turn, I desire. Right? So anyways, that's that. It's just South African Rand, right? Don't make a big deal of it. So I will move my stop now to break even. Cannot lose. Yeah, I get a little extra on the czar, right? All right, so here's the other one, Lira. So we call this sort of I think that's fair, right? Breakout, pull back, okay, and I took which one was it? Oh, I see the role reversal. Was it that? That's a little quick, huh? Let me double check. Oh, there it is. I took that. That's the one I remember. Let me get my drawing tool, clear that out. I took this. Nice. So there's one here, and there's a second one here, because I was scalping. So I was on the 1 minute, I think. But you get the general idea, right? Down, 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 up, right? I think it made about a 50% retracement, went into my roll reversal. Let me clear this out again. Down, 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 up, which is all good. But then the lower low, lower high scenario. Same trade as the other trade, to me. Any thoughts, questions, concerns? Oh, I've got to move my stops. Cool. And why is it that when I move my stop to break even, they're not actually break even, they're small losses? Why you do that? Wayne, why you do that? Why not break even? Not why not actually move it to break even? Do I really care? Why would you move it to break even to begin with? Right? Just think of it. What is the logic of wanting to break even? Why the hell would you want to break even? Why? The number of winners? What if 40%, what if 80% of your trades were losses, okay? But they were tiny, 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 tiny losses, 3 pips each. 80% of them, 80% of the time you lose 3 pips. But 20% of the time you make 100 pips. I guess we have to add that up. You might end, it might not be enough. But my point is, if I lose, I want to track that. I don't want to count it as a winning trade or not a losing trade, right? Not a losing trade. I'm not interested in not a losing trade. So I want to mark it on the books as a loss. But also, let's say I have 10 losing trades. 5 of them are 20 pips each. This is going to get, I guess, you got to be careful, right? 5 of them are 100 pips. Now, let's do it that way. 5 of them are 100 pips, and 5 of them are 3 pips. Roughly speaking, what's my average loss? About how many pips? 5 are minus 100, 5 are minus 3. Or minus 2, minus 1, minus 4, it's all about the same. You don't have to calculate, just give me a rough number. Minus 100, 5 are minus 100. 5 are a couple of pips each. Yeah, Mike's got it. I don't know what you got. Ryan and Sonny, I don't know what you, yeah, about 50 pips. Right. Minus 52. Sounds okay. But what if I had 5 losing trades minus 100 each, and the rest are break-evens and winners? What's my average loss now? I simply have 5 trades minus 100 each. But the average is 500 over 5. Thank you, Ross. Minus 100. Thank you. Okay, minus 100. The only difference here, okay, the only difference here is I moved my stops, half my stops, from minus 3 to 0. So the 0 doesn't get count. Thank you, Eddie. Extra bonus points for that. You see what I mean? So you're so worried about taking a loss that you want to jam your stop and have a 0 and say, well, I didn't lose money. Who cares? Why are you worried about losing money? Gee whiz, right? So you're like, so I moved it to break even so I don't have to count it as a loss. So my win ratios are really high. But when I lose money, I lose 100 pips. Now, what happens now? Let's reverse this. What if you did, so you've now moved half your losers and you're counting them as not losers, right? Plus 1, maybe 0. Let's say plus 1. Instead of taking a -1, you took a plus 1. Scratch. That's my back, by the way, not my butt. All right. So all these now are counted as plus 1 winners. Okay. Okay. So now what you're doing is you're watering down your winners with a bunch of plus 1s and plus 2s. You see what I mean? So now when you show your trading history to somebody, you're like, I don't lose very often, but when I lose 100 pips. But I have a really high winning ratio. I win a lot, but I only win 25 pips at a time. Right. Right. Yeah, well, Mike, what we're talking about is not where you place your stops, is when you move your stops. Okay. Yeah, I suppose. Yeah, I suppose. So right here, I just move them. So I want these to run. I don't need to pick up a few hundred, a couple $100 or something like that. I don't know. So I just let them run. I'm not risking anything. And we know I'm collecting about 70, right? 65 and 71 cents a day for each trade, which over the course of a year is 300% on my money. Okay. Yeah. Okay. So now, Mike, what you're saying is perfectly fine, right? To say, well, we're going to move this and that. The point is, I'm not locking in profit yet. I'm not there yet. I'd probably do that after something like this. Okay. And then, Mike, I would move my stop to like here, or this might play out, but something like that. Okay. So that's interesting though, right? And what's your goal percentage wise for 2018? What's your targeted return? Percentage wise, how much is your account going to increase in the year? 100%? Mike B says 100. That's probably better than your mutual fund, huh? Well, Matthew, what does your mutual fund, what does your retirement account earn per year? Maybe less than 100%, right? And the theory is you have professionals managing your retirement account, or whatever. So, Mike, he says 100%. So what do you have to earn per month to receive 100% by the end of 2018? Yeah, Ryan, right between 5 and 7. Right. No, Ryan, that's one of my pet peeves, and my wife laughs at me because I always roll my eyes because I would just say 6. No, but it's like between 5 and 7, right? You might as well just say 6. Yeah, but lots of people do that, and I'm like, no, just say it 6. Well, I don't want to commit to 6, so I'll throw it like between 0 and 1,000. Right? No, it's not you, it's me. But there are lots of people that do that, and I'm just like, whoa, dude. Well, see, I would say something like that, right? 6.38%. No, it's a meaningless number, but people look at me and they're like, yeah, he's totally right. You the boss, he must be right. Yeah. So yeah, so cool. So what if you only earned 4%? Because remember, by the way, for people that are trying to do the calculation, you're like, wow, 6% of whatever doesn't add up. It's compounding. You have to remember the rule of 7. If you earn 7% over the course of 10 periods, your money doubles. So we know it's less than 7% per month because there's 12 months in a year. Right? Yeah. So 8 is way out. Right, Mike? So 4% a month is, yeah. 60% a year. So is that reasonable? Is 60% reasonable? Yeah. The average commodities trading advisor focusing on either macro or some other strategy that is related or similar to or specifically currency trading, depending on, and this is according to Barclays Hedge's database of all registered CTAs in the United States. If you're averaging 2%, you're a rock star. You could start a managed Forex program here in the United States and raise tons of money if you could just prove you did 3% a month. You'd be filthy, stinking rich. So 4% is redonkulous. Isn't that neat? No. Brandon, I'm assuming we're not talking about increasing lot sizes. Well, so your lot, actually, like if you read my book, Brandon, what I tell you is as your account size grows, to lower your lot size relative to your account size. So I'm trading mini lots with 30,000 bucks in this, 30, almost 40,000 bucks now in this fund account. How many people think that that's ridiculously low? Like you laugh, you're like, he's got 2 mini lots on that. Right? Come on. Say it. Say something, I'm giving up on you. Yeah. Who cares, Barry? I started with $1 million, Barry. Right. That type of question is irrelevant. It's just totally irrelevant. So what is relevant here? Okay. What is relevant here? We're trading mini lots. There's something. All right. So let's look at. So let's do this. I'm going to kill these trades. No! 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 Shoot. All right. Okay. That's what we need to do. Let's look at custom period. Let's look at the month of January. Okay. And what do I do? Do I click around button? Oh, and then I do that. All right. Sorry. Say something, I'm giving up on you. So here's the trades we messed around with this month. Blah, 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 blah. Gross profit, gross loss. So I made 2,400, but I lost 650. So 1702. 1702. 1702 from 3820. So 3,500 bucks. 30, no. 30, 36,500, right? So calculator, bring that over. So $1,700 profit from clear. $1,700 profit from 36,500 on January 1st. Yeah, 4.7% for the month. Keep that up. What happens? But what happens? These are just trades you and I set up together and took as me teaching you how to trade, right? I don't think there were trades there I didn't set up in advance. But what does it mean at the end of the year? What was it, 4.7%? Compounded for 12 months. Yeah, so that's all right, isn't it? $73% sounds even better to me. Yeah. Thank you, Ted. I like Ted's number. I mean, that's all right, right? That's what I'm trying to teach you. Now, that's not a lot on 30 grand, right? 35 grand. We started on January 1st. Now it's 38 grand or something. Not that big of a deal money-wise. But what if it was 3 million? 3 million is not a lot of money. Right? But that's more than 2 million profit. You're like, oh, whoa. So if I collected 20% of the 2 million, it's $400,000 for me and 1,600,000 for my clients. It's not bad. But the thing is, then your client goes out, brags to his or her buddies, and they bring in some more clients, and you make the same in 2019 as you make in 2018 percentage-wise, but instead of making $400,000 a year, you made $500,000 a year, and you didn't do anything different. So the secret is the asset under management. But you see how this is on tiny little mini lots at 30,000 bucks, and you're trading bigger than me, right? You're going for it, right? But I'm trying to show you smaller, 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 smaller. For example, I used to have a rule of thumb: 1 mini lot for every 100,000. Wait. Yeah, that's at a different level though. What was the other one? I think it was 1 mini lot per 25,000. Thank you, Raymond. Yeah, 20 grand on 35 grand. That's not bad, right? So I'm trying to tell you that the secret to sex, secret to sex, I don't know that. That's the secret to success is not big lot sizes. The secret to success is it's a meat grinder. Just sit here every day, do your job, take lots of little trades, and slowly but surely, like water over a stone, just right? Just do the job. Eventually, the water wears the stone out. It's not quickly. right? You're not smashing a champagne bottle over the rocks. It's sitting at the bottom of the ocean with the wave and just slowly grinding down into sand. It's slow. You're building up your account size slowly. But is it really that slow? Does anybody here have a mutual fund that's up 60% for the year? I mean, like, not risk capital, but this is like your retirement savings. This is your low risk money, and it makes you 60% a year. I highly doubt it. Yeah. So when I say, like, you know, be small, be humble, you show this to other professional traders and they're like, oh my God, that's what you're doing. That's crazy. And they're talking about me, right? So again, my message to you is patience, discipline, humility. Like, stay small, stay humble, enjoy the work that you do. Don't find ways to do it more quickly. Don't find ways to cut corners. Don't find an EA that, you know, it's not about making it easy. It's about loving what you do and wanting to do it all the time. Yeah, I want that so bad. Arr. Thank you, Barry. Hang on. So anyways, I hope the message is received. You don't have to, look at that, it's still going to be right in my eye. Look at that, how funny. You don't have to be you don't have to act whatever you think a big dog is to be a big dog. Okay. Think about the people that are in charge of big money, right? At a bank. Are these entrepreneurial people that like to go for it? So why do people want to emulate these people on YouTube where, like, I'm a kid, I got my stupid sunglasses on, I made so much money trading Forex, and I'm going to get my Lamborghini, and we're going to go, and I got girls on the boat, boom, 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 I'm a rock star, bam, 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 I trade Forex. Why do people like that crap? That's so retarded, it's beyond belief. I don't understand it. It's like, really? Hey, Pete. So I guess the people that are filthy, stinking rich, that do party on yachts, they're quite boring because they make money. Because it's difficult, you need to be smart, and you need to have skills, and you never frickin' lose. That means you're not gambling. You know what I mean? So anyways, there you go, 4.7% for the month of January, but we did it together. And there are so many trades we didn't take. Those are just like the sample trades. But bada bing, bada boom. I hope that makes it feel plausible and that you're getting a world-class education free. Boom, boom, boom. Right? You want yellow Lamborghinis? There's your yellow Lamborghini. Boom. Yeah, 8:15. I got it. I get it. I got it. I know it's good. My rhymes are tight. Hang on. I went to the locker room during classes. I broke into your locker and I smashed your glasses. Okay, what was I doing? Oh yeah. Now we got Canadian. But can you see these setups, guys? I hope you start to I hope you start to recognize, like, oh my gosh, these are like totally tradable, right? How many breakout strategies have I taught over the last uh, 15 years of teaching people how to trade? How many different breakout strategies have I taught? Right? Do I have funny names for them? This is the Harvard strategy. This is the eucalyptus strategy.
Reminder here, in a few minutes, we're going to see the result of the weekly EDP employment figure. We're looking for 185,000. We'll get you the back month revision. December again was at 250,000.
Don't forget about the Garburator strategy. Garburator. The ease trough strategy. Oh, wait, I don't have any. Yeah, London breakout. I don't have any cool names. I suck as a marketeer. But instead, I say, well, if you break out of the range, wait for the pullback and sell the retracement at the roll reversal, which we call the scene of the crime. Who broke that range? Go back to the scene of the crime and you will find the evidence. Yeah, that's it. I mean, I don't know any other way. I'm self-taught too, so I don't know if there's another way. Didn't really need one. And I never took a course, so I don't know any cool names to call it. This is through observation that I've taught myself. And I remember when I first started FX Bootcamp and we had a small group of traders, people were taught to wait for the break.
January ADP employment change expected 185,000 compared to last month's 250,000.
And wait for 3 full candles to close.
234,000, another beat there for ADP.
Oh, sounds good.
December revised lower to 242,000 from 250,000, so slight revision lower for December.
Let's go back, just check it out.
Just taking a look at some of the numbers. Small business growth 58,000, large business 85,000.
That should be good for those Lyra trades that closed.
Manufacturing saw growth of 12,000. And Mark Zandy saying the job market juggernaut marches on given the strong January jobs gain. 2018 is on track to be the 8th consecutive year in which the economy creates over 2 million jobs.
No real response.
If work falls short, of likely because they can't find workers to fill all the open job positions.
Generally, it looks like dollar weakness, which is fine, but not a huge response. The thing is, we need to draw down the out of workforce, out of labor force people. So I think the workforce or labor participation rate is actually growing. So these, right? So as that continues to grow, you're not going to get wage growth. And one of the cool things we do in my class is we look at a lot of Fed data, since my professor actually works at the Fed like right now. So he often says, you know, we do this and we do that, and this is what we look at, and this is how we calculate that. And it's great. You know, it's just like nonchalant. I'm like, really? That's so awesome. So anyway, so that's one of the things we're looking at is the labor force is growing because so many people were out of the labor force. Anyways, nothing major going on there. I swallowed my pride. Say something.
The reaction to the dollar, despite the beat at ADP, 124.52 against the euro. Dollar still softer by 0.4%. Yen just fractionally higher, 108.87. The focus has been on the 10-year JGB, which was at 0.1%, the threshold of what market believes the tolerance level of the bankage band, and their yield control is at 0%. See them announce the upcoming purchases and no change for the month of February for the planned QQE purchases.
Euro loving it. Yeah, wet yen weak across the board. The only thing you would not want to trade long would be USD yen. I'll do anything for you, but say it goodbye.
And we're about 10 minutes now to the bottom of the hour. We're going to get the
That's
U.S. and
sick.
fourth quarter
Look at
employment
these
cost
entries.
index and GDP and industrial
Just
production
sick.
data out of Canada. It's also worth noting at 8:30 we'll see the U.S. Treasury announce their quarterly refunding announcement. For the coupons, we're looking for a $1 billion increase to $25 billion 3-year, $24 billion 10-year, and $16 billion 30-year bonds. Also expect the U.S. Treasury to announce a signal that will be boosting the size of floating rate notes and bills, as well as the sales at the belly of the curve. Also, we're looking for potential debt extension announcement. Treasury needs to extend its debt issuance suspension by later today, and most are calling extension through the end of February. We could see some comments on the debt ceiling in the Treasury refunding announcement.
Look at that, huh? You see the beautiful entry? Amazing. Gold in there. That looks like a death spiral. What's going on here? We had this heading further. Oh, I remember this. It had spiked down, but we said bulls and bears would expect this to rise. Right? And that bears would be expecting to resell up here. And then the next one's going to be much higher.
Bank of England's
hang on.
ECB's core, just in a press review saying they must prepare for the possible navigation of Brexit outcomes.
Hang on, Mr. Popular here.
ECB's core speaking to European press.
So anyways, cool Modi, right? One of the things that made me think of is we got to get this the mastermind group set up. So what are we going to do? Because we got monthly pivots coming out, right? Do I ever trade from my phone? Yeah, I do it a lot. And it's true naked trading, because very often I'm not wearing any pants or a shirt or even socks. Very often I'm like stumbling out of the shower. One funny experience I had was Brexit, and I was showering, and all of a sudden I'm standing in the middle of the bathroom just dripping water, and I got my phone. I'm like, sell it all, sell. Totally butt naked, dripping water everywhere. I'm on my phone. Sell it all. Get rid of it. Dump the pound. Go. Dump it. And at the end, you're like, I'm a real currency trader. It feels really good. Yeah. I remember my very first trade on a mobile device. It was my honeymoon. So 2005. Okay, 2005. And I'm sitting by the pool, and I'm like, I can bring up my deal book on my phone. 2005 is a long time ago when it comes to phones. Like 2005 is a long time. And I'm sitting there, and I'm like, huh, look at that euro dollar. Because, I'm bored. What do I do sitting by a pool, right? Look, I'm a Canadian man with the body of a hot water heater. What am I doing by the pool, right? I'm sitting in the shade. So anyway, sitting in the shade, bored. I've been here 5 minutes. Nothing's happening. So pull up the phone, right? I'm like, oh, look at the euro dollar. Sell! Waiter comes by. By the time it's all done, boom, paid for the whole day. I'm like, my wife swims up to the side of the pool. How's it going, honey? And I'm like, I'm loving it. Just paid for the whole freaking day on my phone. Love it. Felt really good. Another time I was in Shenzhen at the Ritz-Carlton smoking a cigar in the jazz club. The bartender, because they're all bored, there's nobody there, right? And it struck up a conversation actually because when I bought the cigar. So later he came by, he must have just like, do you need a drink? How's the cigar? And then he's like, what are you doing on your phone? I'm like, oh, I'm watching the US dollar versus a bunch of different pairs. And he's like, oh, you're a currency trader? Is that Forex? I'm like, yeah. So he had a bunch of questions. I'm like, yeah. So I'm like, hey, yeah, watch this. And I go, no way. He's like, what did you just do? I'm selling the euro dollar. It's like, no way. You just did it there. You're like, yeah, on my phone. This is great. So he came back like 5 minutes later or something. So how's it going? I'm like, I already moved my stop to break even. I can't lose any money. So an hour goes by, I'm done my cigar. He comes back and he's like, hey, can I get your bill? Or can I, do you need a bill? I'm like, yeah. And I said, by the way, do you want to know how the trade went? He's like, yeah, sure. I'm like, made $1,500. He's like, what? Like, yeah, it was a good cigar. Woo. Yeah. But that's what I do, bro. No, but see, is that work? Or is that like love and passion? Some people would say, oh my God, I have to fly all the way to Shenzhen, speak at a stupid Forex conference, and I got to meet a bunch of people and do networking and stuff. And then I'm jet lagged, and I have, if I'm going to trade, I'm going to have to trade from my phone or my laptop without all my computers. It sucks, man. When I go out in the world, I talk to people. Hey, so how's business going? Right? Sitting there, enjoying, reading a newspaper in a foreign country, smoking a cigar, making the best of it, loving it. And why do I do it? Well, I'm a currency trader. I'm totally interested. Right? And so that's why I would never want to find a way to cut corners and skip things and make it easier. Because I love what I do, and it translates in, I hope, decent results, right? So at that point, I was there for the conference in Shenzhen where Daniel and I saved the show. And we'll put that up there. You know what? I'll add the one with Daniel on it. Hang on. It's this one. This will do. It's there we go. That'll work. That'll do. That'll do. There we are.
Irish Prime Minister just reiterating that there's more work to do on Brexit.
So anyways, it's passion and loving what you do. And I think it's really, yeah. Yeah, let's look at the beast. But, you know, all of this is moving, so it should be generally the same, right? Now, if you recall, I analyzed the beast down, but I analyzed the euro yen up. You guys remember that? And sometimes I do that so that you can, whatever your bias is, you can pick the one you like, because that's what trading is. So the beast has come off the top, okay? So if you were a bear, you would want to sell these key pivots here, here, and here, okay? Your first thought would have been this area here, and you may have taken that already. And you know, now you're getting your head chopped off.
Bottom of the arrow gets Canada GDP data for November, month-on-month expected 0.4%, year-over-year expected 3.4%. Canada industrial product price for December expected minus 0.2%. Raw material price index expected minus 2.3%. U.S. fourth quarter employment cost index expected 0.6%. Also, CD Treasury's quarterly refunding announcement.
Okay, so resistance would be here and here. And that's that. I don't see a half decent buying opportunity.
Canadian GDP and product price data in just a few seconds.
Right? I mean, you had that, but that's sort of after the fact.
And GDP 0.4% is in line with expectation. Year-over-year 3.5% is 1/10 higher than expected. Employment cost index at 0.6% is in line with expectation.
Yen is weak across the board.
Price minus 0.1% is 1/10 higher than expected. Raw material price at minus 0.9% is higher than the minus 2.3% expected. Backbook price down 1/10 to 5.4%.
U.S. Treasury just saw $16 billion in 30-year bonds, $1 billion increase as expected. They're also going to be lifting the sizes of 3-, 10-, and 30-year maturities going forward. They're going to be increasing the size of 2- and 3-year auctions will increase by $6 billion by the end of the first quarter. As expected, they're going to increase the size of the floating rate notes auctions as well.
Just gorgeous. Beautiful entries here if you're a bull.
Detailing employment cost index. Fourth quarter wages and salaries up at 0.5% versus Q3.
So we'll have to do a swing trading course or monthly pivots, but we might have to push that off the month. We're just gonna have to push that off to March pivots. So lots of beautiful things happening in the world of beautiful things. Just taking a look around. I've given up on you, and I swallowed my pride. So that's an aggressive
Look at
sell.
the Treasury curve, the
So
10-year largely
that's an
unchanged. It yields a
R2
little
or
bit elevated
S2.
following the announcement of next week's coupon sales going up by $1 billion each, 271 in the U.S. 10-year.
See, like when I see things like this, if you are a bear and you want to sell this, you know, these are the two prices. So it seems to me the drops like this should be the thing that gets you on the clue train, right? This or this. But this suggests an S2 bottom. And so that gets us to the lower part of the green here. I'll do anything for you. But I'm saying goodbye.
Dollar a little softer here after the data and Treasury refunding 124.70 currently being lifted.
Very nice. Very nice. Very nice. Everything's a very nice. Look at our Swissy. Right? So if you remember, what, 3 months ago, I spent quite a bit of time on the Swissy trying to convince you guys to consider it. Oops. Look at that, huh? M4 to M1 month. Yeah, Barry, you're better off paying in pound than paying, today than paying in pound 6 months ago, right? So Euro Swissy is one. Here's pound Swissy. Amazing. Okay. So the top of the pound Swissy this month was M4, which means the predicted bottom is M2, which is here. I mean, it's amazing, right? Check this out. So you got to go J1, right? Oh, that's way off. Hang on. J1 is about here, okay? Which is the monthly M2, which predicts heading to this high, and then it's come all the way back down. Right? It's beautiful though, isn't it? Very awesome. So this whole thing seems to be moving first and foremost off monthlies, and then of course then you fold in your weeklies. Oops, I think I just killed it. No. I swallowed my pride. I'd do anything for you. Okay. Okay. Support, resistance. Obviously, it's kind of stuck in here as well. Not a lot to say. I mean, we really should be, setting up the next move. It's not like that's not typically an entry, but obviously impacted by the U.S. dollar as well. So why don't we call it today? ADP, fine, right? Nothing terrible there. State of the Union address, it was fine. The market didn't move that much. We have the FOMC afternoon, and that is Janet Yellen's goodbye. What are we going to do without Grandma Yellen? We going to miss her? Shoot, I barely knew her. Seemed like Ben was around a lot longer. Yeah. So anyways, that'll be interesting. Well, did she do a fine job? I don't think she changed anything, right? Yeah, that might have been it, but I think she'll be a forgotten person. Ben Bernanke, I'll always remember as someone who coordinated a global response to the financial crisis. I mean, he was knee deep in some pretty awesome stuff. Greenspan will always remember for Greenspan, But Yellen, what are we going to say? Quantitative easing? No. Operation Twist? No. I don't know. It's just sort of, yeah. I'm the yeah emoji. Yeah, but everyone's been data dependent. Who wouldn't be data dependent, right? So I don't know. She didn't screw it up, which is great. Powell has the potential to screw it up. Yeah, I think she did okay. Yeah, I mean, I have no complaints with Yellen, right? They may have been a little bit slow, but I think I'm okay with that. A lot of people freak out, but I think the people that do freak out that the Fed was so slow at moving, They freak out based on what's happened in the past. So you see they're at least the people I see when they're on TV, very often they're professors in their 70s, and they're freaking out like inflation's going to go to 40%, right? Like it did in the 70s. But we don't live in the 70s anymore either. Right? So I'm not that concerned. I think they moved at an appropriate time. I think they're moving at an appropriate pace. But like I said, now we can get a non-banker in there, or a non-economist in there that could really mess things up, because it's not that Jay Powell wouldn't understand, it's the personality. So for example, when you have a chief financial officer for your major corporation, it's not that they have the skills per se, it's that they have a CFO type personality and attitude of, they'll work 300 hours overtime to find the missing penny. That's the personality you want in that job. Not that they have the accounting skills or the finance skills, but the person that will stand up to the CEO and say, no, you can't have it. That's right. Or no, we won't twist the numbers in the report that way. Yes, that'll be good for the stock, but I'm the CFO and I'm not going to twist the data and put my name on that, because it's just wrong. And I don't care what you could say, you're going to have to fire me, right? And the CEO is like, hey, let's just play with those numbers a little bit, right? So you want the personality, because you know what's going to back it up. It's not a skill thing, it's a personality thing, in my opinion. I mean, you have to have skill. So Powell, I think, he's not dumb. He's smart enough. He's not an economist, though, and therefore you're going to get someone that might be more like the CEO and like, yeah, let's kind of play with the definition of what profit is. Let's kind of, yeah, it's not really fudging the numbers. It's gray area, but, and that's what a CEO needs to do, whatever it takes to provide shareholder value and all that kind of stuff, right? Right? So I don't know if I want a CEO. That's why the President of the United States doesn't run the central bank. So that's my concern. I don't know if you even want to call him a businessman, but but a non-economist, I don't know. Because I think if you're a true, like, an economist that got a PhD from a real school and then walked straight into the Fed and spent 30 years in the Fed, right? I think they're so independent that they would rather die or go to jail than listen to the President of the United States tell them what to do. You know what I mean? I think Janet Yellen or Ben Bernanke, for example, would have said, I'd rather have the President of the United States throw me in jail than me changing policy on their demand. Because we're independent, and it's the institution that I'm talking about. It's not just me, it's the next 1,000 years of this institution. And, I will not fold to the President of the United States or anyone else. We will make policy decisions, and we will carry them out, right, as the Fed sees it. So I don't know if someone that hasn't been in that position their whole career, their whole adult life, will do that. And that's the big question mark. It's dangerous, because if you want to kill an economy, the Fed could just as easily do it. Right? So anyways, we're on our way to the next Venezuela. Right? No, I don't reckon Powell will be a puppet. No, I'm not saying any of that. I don't know the man. I'm just talking about personality type. So we shall see. But I think it's a higher risk than someone that was born and raised in the Federal Reserve Bank. Warren says, well, Powell might share the same views as Trump, which is fine. Okay, that's fine because the leadership at the Fed will run the Fed. But you don't want a little red phone sitting on the desk of the chairman of the Board of Governors in Washington, D.C., right? Because, right, the Fed is not that far away from the White House. It's much closer to the White House than Capitol Hill, right? So anyways, what you don't want is a direct line where, you know, a president calls up the Fed, says, hey, we got, you know, print some money, we need some help, let's do this, right? Print some money, we need to take care of a debt. Print some money, we need to do this other thing. Print some money. And by the way, that's what Venezuela did do. It borrowed and then it paid for its debt by printing money so that it could borrow more money and then paid for that debt by printing money, literally printing money. And now they have something like, is it 1,000% a day or something crazy? I mean, it's ridiculous. No, but it's like, it just skyrocketed in the last like 6 weeks or something to like 10,000% a month or something crazy. I think I read it. It's like, it's gotten to the point now where the average person in Venezuela makes $2 a month. Yeah, no, it's like really got out of control. So it's time to go in with some US dollars. So I'd like to roll in with like 25 million and say, what can I get for 25 million? Somebody says, anything you want. Yeah. No, I want to buy beachfront property, bunch of skyscrapers along the beautiful beaches. Okay. Yeah. Well, if you learned anything from Zimbabwe, then find out how to make money from that and then do it again. Yeah, Warren says you could probably buy the whole country for 25 million. The problem is you still wouldn't own anything of value. That's the problem. So you're going to have to hope that in 25 years they'll do something. But I would be betting, like, I wouldn't do it if it were like El Salvador or something, right? I would gamble on Venezuela because of the oil. If it wasn't for the oil, sorry, not my problem. I don't run a nonprofit. Someone else will worry about that for me. So anyways, I got to jump, babe. It was real. Peace on earth. May the pips be with you. May your profits be above average. I just threw you the peace sign, even though the camera's off. I'll see you. Is it Thursday or Wednesday? It's Wednesday, right? Yeah, it's FOMC Wednesday. So play safe out there, and I'll see you tomorrow. And then remember, Friday's non-farm payrolls. See you.